All right. Hello, everyone. This is Tim Davis here, and I'm showing you guys, or I'm about to record for you guys my weekend market review, or my end of the week market review. And this week, I'm going to start off by taking a look at the monthly charts of the Dow Jones, the Nasdaq, Russell, and the S&P. First one up, we have the S&P 500. And I want to point out a couple, just two things that I'm really paying close attention to, which is what I believe is going to happen. Look at the bottom of my chart. This is the last indicator right here is the RSI. You see the oscillator line of the RSI just about midway on this monthly chart. So it's sitting right around 51 at a reading of 51%. Okay. I do believe that on this monthly chart, since we have already started to decline on the monthly charts, I think we are really heading for the same type of RSI reading we saw back in 2009, which was well below the 30 level of the RSI line. So if we are in a store for seeing that, then we got a ways to go, folks. We got a ways to go. So I would not, still not ready to buy in to these short-term bounces as something that's sustainable. So just be careful and be mindful of that. I still think there's much more room to the downside. All my other indicators are also showing, look at the TTM squeeze, still showing on the monthly chart that the momentum is still towards the downside. Wins percentage and full stochastics is also still pointing downward as well. And if you look at the candlestick patterns on the monthly chart, we see it's like we're still continuing to roll over. That is the monthly chart of the S&P. And if I was to show you guys the others, they will all look the same, similar. So I'm not going to show you all the monthly charts, but I wanted to show you guys just the S&P in general to show you guys what the overall market is looking like on the monthly chart. Here is the monthly chart of the Dow Jones. Same type scenario. Again, I still think we're going to probably see, I personally think we're going to see the same type of scenario we've seen back in 2009. I think we're going to hit an RSI level below 30 on the monthly charts before we see some type of sustainable reversal to the upside. And this could be drawn out because in 2008, 2009, it took almost a year and a half from, because the move down actually started back in 2007, believe it or not, and it didn't bottom until 2009. So that almost took about 2 years. So with any short-term rallies, I think they're not going to be sustainable. So just keep that in mind as you trade and navigate through this market. Be nimble, be quick, and try to stick with the trends. I mean, you got some sectors that are doing much better than others. Energy is really starting to outperform. I'm going to show you guys the oil market, the oil chart here in a second, WTI, crude oil. But here's the Dow Jones. As you can see, the monthly chart starting to roll over. We hit a high of 36,952. I don't think we're going to see new highs anytime soon. So I think we're going to continue to create, start to create lower lows. That's Dow Jones. Taking a look at the Russell. It's been one of the weakest links. It is really starting to hit some oversold territory. I mean, oversold levels on the weekly chart. So I would not be surprised to see a temporary bounce, but I don't think these bounces are like be real quick, I think we're going to see some deep oversold levels on these markets, folks, over time. RSI reading here is just around 42, so I still think there's much more room to the downside. And if you see the monthly chart, we just been on a down slot low on Russell, and since December. Russell's really just been trickling lower since December. And I think there's still more room to go. And looking at the Nasdaq monthly chart. Might as well look at all three of them, all four of them, just to, so you'll see they all look the same. Nasdaq monthly chart also starting to, ain't starting to, but it's just been rolling over. Nasdaq doesn't really. A lot of the stocks within Nasdaq don't fare too well in the higher inflationary environment. So that's one of the reasons probably see the Nasdaq looks like it's suffering a little bit more than the S&P and the Dow Jones. All right, now I want to switch your attention to near term because we're seeing a nice little rally today. The day is Friday, May the 13th, 2022, and it's now 8:12 p.m. So we did see a little rally in the market today. So with that said, here's a daily chart of the Nasdaq, and looks like we traveled down to the 50% Fibonacci retracement level, and we're starting to get a little bounce here. Looks like there may be a little small gap in the market right around 12,076. So we could see some continuation on next week to the upside. Here's a range in between the 50% Fibonacci retracement level and 38%. Somewhere between there, I think we'll see a reversal back to the downside and probably continue downward. So gotta see how it pans out next week. But again, these rallies, folks, are probably gonna be so even if you see like another 400 or 500 points on the Nasdaq, still don't get too overzealous with that, because even if we get a continuation next week, you can see an immediate reversal, and the reversal is going to be hard. That is the current look on the daily chart of the Nasdaq. Here's the current look daily chart of our Russell. Again, the Russell, look at the daily chart. Look at the RSI. It has hit oversold territory in the near term on the daily chart. So again, and it got a perfect bounce right off the 50% Fibonacci retracement level, as you can see here, and starting to reverse back to the upside temporarily. Again, not looking for much more upside, maybe another 60, 70 points possibly, and then maybe a reversal back to the downside. 60 to 70 points in the Russell and in the S&P sounds like a lot, but considering how much volatility we have in this market over the past year, it's not really a lot. I mean, because the reversals have been sharp and hard. So another 60 points possibly, and I say that possibly because anywhere within this range between a 50 and a 38, we can see reversal. So just keep your powder dry and be ready for whatever may come. And just be prepared to take the other side of the trade if you are in and out of these markets. So Russell, how about the Dow Jones? Here's look at the Dow Jones again, hitting some oversold levels. So we've seen like an oversold dead cat bounce. To me, that's what's happening right now. We are in the middle of a dead cat bounce. So Dow, don't expect it. I don't think that's going to go up much. You know, we may go up a little bit more. It's just below its 23.6% Fibonacci retracement level. So we may go up just a little bit more and before it starts to reverse. So we got to see how that pans out. And taking a look at the S&P. Did we do that one? I don't think we did that one. All right, here's the S&P. Almost back down to its 38.2% retracement, and it got a nice reversal back to the upside. So again, maybe another 40, 50 points, possibly, or maybe even more than that. So somewhere, I don't think we're going to go all the way up to the 23.6. We may stop shy of that. So we may get to 4,100, we may get above 4,100. Yeah, see how this plays out over the next couple of days or so. But I think whatever happens, I think ultimately we will end up reversing back to the upside. This is what I honestly think, because it's like I showed you in the monthly charts. The monthly charts seem like we still have a lot more room to the downside. And one of the reasons also make me believe that we still have a lot more room to the downside. Let's take a look at the overall breadth of the market. As I keep showing you guys this Wall Street Journal tool that shows you the new highs versus new 52-week lows. Okay, this is the New York Stock Exchange. as of Friday, May the 13th, 4 p.m. This is the reading. The new 52 highs versus the new 52-week lows. On the New York Stock Exchange, we show 12 new 52-week highs versus 203 new 52-week lows. Not as extreme as we saw the past couple days, but still extreme. You know, there's almost 191 more new highs versus new lows. That is a big deal. That's a big deal. Until we see new highs outpacing new lows, then you can't fall in love with any of these rallies. Here's a Nasdaq, 14 new highs versus 327 new lows. See that? Look at the bottom of my new lows, 327 versus 14 new highs. So we had approximately 323? I'm sorry, 313 more new lows than new highs. Okay, so until we see that flip-flop, where you have more new highs, no more new 52-week highs than new 52-week lows, then all these rallies is just going to be a bear trap. All right. Right now, let's take a look at the VIX. Here's our VIX, and as I've been pointing out, I've been telling you guys, watch out for this VIX. I'm telling you, once this VIX pops this $39 level, look out above for the VIX and look out below for the markets. Right now, the VIX is still in a range right now. It tried to hit that area a couple times. The 39 tried to break above. We had not broke out above this trend line just yet. Looks like the VIX is starting to reverse just a bit. However, if I was to, let me do this. VIX. Let's take a look at a. Let's take a look at the VIX with a. In fact, let's look at this one. So there's a daily chart of the VIX with my moving average lines on here. So it looks like we could see a VIX pattern such as like we've seen here, where the VIX travel back down to the 50% Fibonacci. I'm sorry, 50%. I'm sorry, the 50-day moving average. This blue line, my 50-day moving average. Then we got a little bounce. So we could be in store for the same type of scenario. We could see the VIX come down to this 50-day moving average and possibly get a bounce. If it does not hold at the 50-day, we can see it move back down to the 200-day, 250-day, and then get a bounce. No matter how it happens, I think eventually the VIX is going to hold support at one of these moving averages and then rally again. I think this next rally in the VIX, folks, should push us above that $39 level in a significant way. So that's something to consider and pay close attention to. All right. All right. Last but not least, we are going to take a look at the crude oil chart. Here's crude oil. This one I was not sure what was going on, but it looks like the crude oil has just been consolidating, folks. That's all it's been doing. It's been consolidating, ready for a new move higher. And I wanted to highlight that in a massive way. So what I did was took a close look at the at crude and saw that it was creating these higher lows along the way. So even though it has dropped below 100 over the past, I guess, couple weeks or so, several weeks or so, a couple weeks or so, it has been creating these higher lows. So it's been dropping below 100, but not too far below 100, and then bouncing right back. And if you look at this triangle pattern that I was able to discover, and if we look at where price action continue to pull back to this yellow line, you can barely see it, but this yellow line is my 20-day moving average. That looks like it's been a solid area of support. So that support has been holding quite well. Okay. So it looks like this high 129 and this area down in this triangle area looks like we are about to break out of this triangle one way or the other, maybe to the upside or to the downside. If I was a bet man, I would say 90% chance we are going to break out to the upside on crude oil. And if we get that breakout, look out 130 because we'll probably blow that out of the water. Let me go back to a daily chart of crude. So here is what it looks like close up. So like we're getting ever so close to breaking out above this upper trend line. With that said, I did add a couple more energy stocks to my portfolio this week, and I added, just so I'll let you guys know, added USO. That's another way to play crude oil, because you look at USO, look at WTI crude, it looks just the same. It's been USO crude has been tagging this 50-day moving average, using it as a level support. Look at that. Every time we pull right back down to it. So with that said, we can easily draw a triangle type pattern as well here. Easily draw a triangle type pattern here. Looks like we are in this triangle pattern and looking for a possible breakout. So I got back into USO with a few contracts there. Devin Energy is another one. It's just been extremely strong, folks. It's been extremely strong to the upside, and it is also looking like it is taking a couple bounces off its 50-day moving average, which is this blue line. Now bouncing off of his 20-day on his daily chart. Looks like it's ready to take a nice move higher. It's just been extremely strong, so I think this was going to be sustainable. So those are some options as far as crude and energy. I think Devin Energy is a good way to play this crude move. The USO also, and also Occidental Petroleum, folks. It's another one. Occidental Petroleum. I think Occidental Petroleum probably has the significant upside potential. I say significant because it's been hovering right around this $60 level, between $60 to $65 level. It's been hovering around here for a very long time, probably since a couple of months now. I think we're about to really break out in a big way in Occidental Petroleum. Here is a weekly chart. You can see all this congestion right here. Price action is up and down. So a nice little, looks just like a perfect when it's weekly chart, it's like a perfect bull flag. So all it needs is a convincing move above 65, and we're going to see this thing really take off. Here's a monthly chart. Look where we could be headed. Let me clean this chart up just a little bit. And let's switch over to, as a matter of fact, yep, let's do this. All right, so here is Occidental Petroleum. Let me get rid of this upper trend line here. I got it here. Don't need that anymore. Remove that. And get rid of the Fibonacci. Remove that. We've already crossed that level. And let's do this. All right. So here is a longer term look at weekly chart of Occidental. And see where we kind of like bottomed out back in 2020, between 2020 and 2021. And we just been on a steady upward trend since then. It looks like where we at now, like I said, this is a perfect, that's a perfect, if you look at previous history, look at where we are now. This level right here, I'm even draw a trend line from this level. Let's do this. Sorry about that. My dog's a little happy. I'm almost done with you guys, but I want to point out to you guys some what's showing up in our markets. All right, now let me extend this to the left, and you'll see how this has just been the perfect level for a possible breakout. So look at the level where we are now on this weekly chart, and look where we've been, where price action has been bouncing off. That's been a strong area of support in the past, over the past several years. So since 2015, we bounced off of this level multiple times before actually breaking down below that level. See that? We have bounced off of this level multiple times since 2015. Dipped below it a little bit here in 2017, got back above it, bounced off of it again here in 2018, broke a little bit higher, and then we sold off. Now we're back testing that level again. If we get a breakout above this level, folks, we're going to see Occidental, probably jump quickly to 75. They may be back up to test this level up here around 86. So that will be some, some good energy stocks to pay close attention to. Occidental, Devin Energy are the two that I'm really paying close attention to, and then the USO ETF itself. All right, folks, I think I showed you guys everything I needed to show you guys for this weekend's market review. Next week, I think there's a Fed speaker, I want to say, that may be sharing some light, some information on Tuesday, if I'm not mistaken. Crude oil, again, I say, folks, is going to be another sign of inflation. It's just not letting up anytime soon. So I think we're going to get a breakout on crude. So pay close attention to that. And I think the markets eventually, after maybe a little bit of rally, I'm going to come right back down. Pay attention to the VIX. I think the VIX is looking to find some type of support. As a matter of fact, let me do this real quick. See, here is my VIX futures. I have a blue line, which is my 50-day moving average. Look how it's just going about its way, mosey on through price action. Looks like we may be coming back down to this 50-day moving average. Then let's see what happens. We could be finding some type of support, because if we look at the way crude, the VIX kind of rounded out after this pullback from 36 back in March, rounded out, dropped below the 50-day, and came right back above it. And now it looks like we've been bouncing or having a nice little move off of this 50-day moving average. We bounced back above it here, came back down toward here around the beginning of May, hit that 50-day and got a nice little bounce. So the question is, do we hit this 50-day again? Because as price action comes, as the price action comes down, with this uptrend that the VIX has been in, you'll start to see the moving average start to curl up. So let's see what happens first. Do we find support somewhere around between 27.50 and 28 bucks? We have to see how that pans out sometime next week. And if we do find a support anytime soon, you're going to see a big move up in the VIX, and that'll be, a sign that the regular markets, the overall market indices, are probably ready to head back down. All right, folks, if you want to reach out to me, again, want to send me a message, got any questions about any positions that I'm holding, or you just want to chit chat, middle of the week, something that that pops up and you're not sure what the market's going to do next, you can always reach out to me on Twitter, folks. Again, I'll show you guys my Twitter feed. For those who are not friends with me on Twitter, feel free. You can always find me on Twitter. You can inbox me on Twitter. Here's what my Twitter page looks like, at God's Child Tim. And you can also find me on Facebook, folks. Yes, I'm still on Facebook. So Facebook, show you guys my Facebook profile. If it loads up for me. All right, so here's my Facebook profile. It just says Tim Davis. There's a lot of Tim Davises out there, so you got to find the right one. If you look at the top, you'll see my Facebook handle, facebook.com/TimD88. So that's the easy way to find me. Facebook.com/TimD88, and you should be able to come right to my Facebook page. And you can also, once you get to Facebook, you can send me messages through the Messenger app. Okay. All right, folks. Other than that, that's all I have to share with you guys on this week. this weekend. Enjoy the rest of your weekend, folks, and I will be with you guys next week and probably be sending messages throughout the week on the Discord channel that I am affiliated with, as well as on Twitter, as well as on Facebook, just to keep you guys updated as to what the markets are showing us. Have a great weekend. See you guys next time. Oh, and one last thing I forgot to add. For those who are weekend buffs and you like to just find out more about the markets and more about us traders in general, our lifestyle, how we trade, what we look for, what got us interested in trading, I will be doing I guess what's called an interview session with Mighty Soldiers Trades, and I'm trying to show you guys the link. I think you can find, you may be able to find a link on my Twitter page. Let's go to my Twitter page again. Also, it's at the front of my Facebook page. Just remember that. So there it is right there. Keeping it real is what is titled, and I'll be interviewed by Andy with Mighty Soldiers Trades. I'm sorry. And if you come to my Facebook page, you click on this YouTube link at the time of the event, you'll be able to join us live. That is set for Saturday, May the 14th, 2022. Yep, Saturday, May the 14th, 2022, 4:30 p.m. And if you come to my Twitter page, you should also be able to access it there, the link. And again, here's my Twitter feed. And if you come to the front of my page, I think I have it posted in here somewhere. There you go. So here's the link also in my Twitter feed. So if you'd like to join us, just two guys sitting around chit-chatting about the markets, chit-chatting about how I got started, and things that I look for within the market, things that I like about the market, some downfalls, downfalls, pitfalls, and good times and bad times, just all about me and my journey. All right, folks, I'll catch you next time. Have a great day.